What is going on, guys? Brent, Blackstone defaults on $562 million commercial mortgage-backed securities as it keeps blocking investor withdrawals from $71 billion real estate investment trust. What is going on, guys? Brandon here. This is a story we've been watching now for a few months, and this is the really the back end of like a lot of those easy cash companies like Zillow, Open Door, uh, Purple Bricks, whatever. All these companies that were paying, trying to do cash for homes, things like that over the last couple of years, and just completely fell apart. Everyone shut their doors because they couldn't do it. I was in that space. I was not a part of any of that garbage. I was buying homes myself and renovating them and then refinancing them and renting them out. And I have a real estate company that does that. We're not doing anything right now because we stopped a while back, a year or so ago, because things are crazy. They're nuts. We don't need to be acquiring stuff when there's homes that they just make no sense. The prices are through the roof, and quite honestly, there's not a lot of people hurting. Even though there's a lot of data, this is what's really interesting about the market. The market is giving us all kinds of mixed signals, and this is what's happening when you break the currency excuse me, and you have interest rates going all over the place. Because we talked to so many people and my team and many people weren't hurting because the government was subsidizing their living in every way possible, whether it was Section 8, whether it was welfare type payments, whether it was food stamps, whether it was help with utility and things like that. This is not a debate of whether those things should be done or not. That's a video for a different day. What I'm telling you is that what we saw on the ground, especially here in Michigan, in Metro Detroit area, is that people were getting helped all the time. I mean, we would go to people that were, for all intents and purposes, really hurting actually on the inside, but they wanted full retail, what Zillow had. Give me what Zillow has, and they think it was worth more. So they clearly weren't hurting on the outside. They might have had real issues deep inside internally, just their core financial situation, things like that, and they're going to have problems in the next few years here. But not at the moment. They were being propped up by all this easy, cheap credit, and this is the likes of Blackstone facilitating these things, BlackRock. So I wanted to give you a local example, and then also, and we're talking about the big boys now. So we got out a few years ago because we were like, this is ridiculous. This is insane. We're swimming upstream. We're spending all kinds of time, energy, and cash trying to just find one person that needs our help. And not many people did because the government was subsidizing all of it. So the government's in bed with these companies, and the government's subsidizing and buying up themselves, right? So you have these commercial guys that are coming in with unlimited cash because they're using mom and dad's 401k money, their pension money, all that, and they get to use unlimited cash and then also currency printed by the government to just come in and buy people up at 10%, 20%, 30% over average value, fair market value of the home, and you have nothing you can do. I mean, as just a mom and pop or just a normal person, normal Joe, you need to buy a good deal. You make money when you buy. This goes for stocks. This goes for Bitcoin. This goes for real estate. You make money when you buy, not when you sell. That means you have to get a good deal. And when the deals don't make sense, only the Klaus Schwab firms, Blackstone, BlackRock, all these different asset managers get to come in with unlimited cash. Again, just cash that's funneled in every single day from people's paychecks, 401ks, yada, yada, yada. This is what we are fighting against. So you're fighting against this cheap currency, and these guys get to borrow at 0%, 1% financing, where we have to borrow at 4, 5, 6, 7, 8% or more. Some people might be using hard money lenders, but we're doing it 4, 5, 6, 7, 8%, and these guys get 1% financing, or less, maybe 2% at most if they are getting lazy. So this is the crux of the issue that's going on here, and it's all crumbling because the rates are moving up, as we've showed many times. This is, and we show this in our market updates, so go check our market updates out every single day. We do a quick 5 or 10 minute market update every single day. What's going on? Look at the U.S. 10-year Treasury, 4.1% almost. So the rates keep climbing here. As we've seen, I'll back out to the 50-year. It's these trends down. This is what's aided all the market going up. So people think they've been getting ahead in life by being in the stock market. No, you've been keeping up with the currency printing. You've just been hedging in real estate or in stocks. This trend downward is what has boosted the likes of Warren Buffett since 1980, 42 years. Boosted every portfolio, asset manager, even guys that I think are very good. The Steven Schwartzmans, but the Ray Dalios, the Stan Druckenmillers, the Warren Buffetts. These guys just saw it. They understood the Fed put. They understood, we're in an environment where the rates are trending downward, and meaning the bonds are being bought up by the Fed. This is a game being played, and very few people actually understood this game. And this is why the wealthy get wealthier, and the average person, 99%, have no idea, because they don't understand the dollar is debt. Because you can see this happened after the 70s. Obviously, the dollar was taken off gold, so it's not linked to anything. So they realized, oh my goodness, rates went all the way up. We got to crush this stuff, crush inflation, all that, and then boom, it just went down. They broke the market. I mean, taking a gold off in 1971. Let's see here. I'll try to back up a little more. So taking gold off in out of the money in 1971, you can see like these, just kind of general market gyrations and things like that. After the 40s, they dropped it down. We had financial repression. Then we come back up here. We take gold out of the money, and it was like, whoa! The 1970s, inflation just started going through the roof. Probably a lot like what's going to happen in the next 10 years here. So they had to bring rates up and crush it to get it back down. So that happened, and then that broke the market and had to go back the other direction. So now we need to go back the other way. I mean, look at this, how these very symmetrical patterns here, which are truly amazing. So you can see these huge, that's what's really cool about the bond market. It's the biggest market in the world, and it gives you a window into what is going to happen going forward. So we'll see what will happen going forward here. Will we go to negative rates, or will we continue to now climb back up the other direction like we have here? So we'll kind of come back up and be another arc up pattern like this. So that's what's going to be the really interesting thing to see here going forward. But again, back to this and what's happening here. And here's Blackstone's website, and they're gonna, oh, we're so amazing, and we do all kinds of stuff. And we just did a video, the last one we did, like every month we do a video on them because more and more bad news comes out. We got another one on Credit Suisse here, having another bad month after month being bad because the rates, being up and going up. And they're gonna tell you how great they are. We're so wonderful, we're so good. And they just got Cal, or something like that, to put another billion or a couple billion in there. So they're literally locking people up over here, can't get their cash out because there's not enough. And then they're backfilling with other useful idiots just coming in. Oh, okay, here, sure, Blackstone, here's another $1 billion. Here's another couple billion from our endowment. Here you go. And then Blackstone's like, oh, thank you. And then they pay off the next people the people that were waiting that month. And then they pay off, get another investment from more useful idiots, and they pay off the older useful idiots who are still waiting there to be paid out. Because as we can see here, we'll read into this a little bit. Wall Street's largest commercial real estate landlord, private equity giant Blackstone, has defaulted on the $500+ million bond backed by a portfolio of offices and stores owned by Sponda Oy, a Finnish landlord acquired in 2018. While the PE firm had sought an extension from the holders on the securitized notes to allow time to dispose of assets and repay the debt. Again, real estate takes a long time to dispose of and sell and collect the cash. The surge in market volatility triggered by the war in Ukraine and rising interest rates interrupted the sale process. Oh, you don't say. And bondholders voted against a further extension. Interesting. And since the security has now matured and has not been repaid, loan servicer Mount Street has determined that an event of default has occurred. The loan will now be transferred to a special servicer. This debt relates to a small portion of the Sponda portfolio, Blackstone representative said in an email statement. We are disappointed that the servicer, well, you know what? We're disappointed that you don't have enough assets for people to get their money out. So why is that? That's why they lock it up. That's why, like Ethereum, they lock up, they stay crypto, we're going to lock it up. Your bank locks up your cash. You can't go try to get 5,000 right now. Go get 10,000. You can't. There's zero reserve requirements. They go use your cash and they go spend it. They go give it out in loans. They go gamble in the stock market, which they're allowed to do now. They go give it to private equity firms to go gamble on, buying these buying these assets that they can't perform on. I mean, this is the financialization of the economy that we have going just down this circular drain down. This is absolutely phenomenal. And while Blackstone is understandably trying to minimize the news, you think? The private equity firm clearly continues to scramble to stabilize the bleeding in its massive real estate portfolio. And Wednesday said it had blocked investors from cashing out their investments at its $71 billion real estate income trust, the BREIT, as the private equity firm continues to grapple with a flurry of redemption requests. You don't say. BREIT said it's fulfilled redemption requests of $1.4 billion in February, which represents only 35% of the approximately $4 billion in total withdrawal requests. Wow. The silver lining is that the total BREIT redemption requests in February were 26% lower than the $5.3 billion reached in January. However, should rates keep rising, it's likely that the March redemption flood will be higher again. You think? And rates, like we just showed you, going up again, boys. Buckle up, because this was all, the last couple months was happening in a lower rate environment. Look at this is all in the in the lower section. Let's see here. Got to go back to the 1 year. So this was all this happened, and then Blackstone's been having all these issues in the last couple months right here, in a little bit lower, back down to 3.5. Now this was 4.5. when it was breaking things. This was all breaking stuff for them. Now they get back down a little bit. They still can't handle it. Now it's breaking again. Rates are going up. So good luck. Absolutely good luck. While gross redemptions for February are consistent with prior management commentary, the overarching data continue to align with our view around decelerating retail-oriented product organic growth broadly. I mean, kind of gobbledygook is this? Credit Suisse analysts. we got a Credit Suisse article. I mean, this is just the Ponzi upon Ponzi, the dominoes falling. Credit Suisse in massive trouble as well, and we'll have a video on that as well, so go check that one out. We'll get into this a little bit. Credit Suisse crashes to an all-time low as they're boosting deposit rates to reverse the bank run. I mean, just bank run after bank run. Credit Suisse having bank runs, Blackstone having bank runs. As we previously reported, Blackstone has been exercising its right to block investors' withdrawals since November. This is when we started reporting on it last year. And to go back to other videos, just search Blackstone on our channel. You can see the other videos we've made last year. And you want to see the one we made like a month or two ago. Just hilarious. And just, again, I kind of laid out exactly what's happening and how this Ponzi that's being played. Since November, after a request hit a preset 5% net asset value of the investment trust, which is marketed to mostly high net worth individuals. So again, high net worth individuals that don't know how to manage their own money, we're going to put it in here. Again, making money is really, it takes a lot of skill, and then diversifying money actually really doesn't take as much money to keep the money. I think it's actually less skill. But again, when you have families or generation after generation, they have really no idea what they're doing. They've just given to private equity or hedge funds or their management team, their family office, and they just go do whatever and try to sprinkle it all over the place. Clown world. Credit Suisse downgraded its rating of Blackstone's stock to underperform in November, partly because of the rise in investor redemptions. Blackstone's shares were down somehow only 0.25%, but it lost 43% of its value last year. You think? And Credit Suisse as well. You're on the chopping block as well. So I do want to finish with this though. I think Credit Suisse, they've been decimated as well. So we'll get into that in a different video. But Stephen Schwarzman, who runs Blackstone, he got $1.27 billion in pay last year, dividends, etc. I mean, he doesn't probably collect a normal paycheck necessarily, but dividends, everything. So Stephen's doing great. If you guys wanted to know, I would recommend getting his book though. He has some books. I believe I have this one, and he's a great person to learn from, how to grift and graft from society. That's for sure. Highly intellectual, highly elite, way smarter than you. Of course, smarter than you. The guy doesn't see Bitcoin coming, doesn't see technological change, doesn't understand how to actually invest in real estate. Apparently, when you have cheap cash, cheap currency coming from an unlimited currency printer, I could be a genius in that. I mean, I could do way better. I could be paying myself $10 billion a year, and I'd have enough money to pay off all my investors as well. So, because I've had to do it. I've had to do it, Stephen. And I've had to do it with my own money, and I've had to do it with other people's money as well. And I've had to pay it all back. I had to actually do it. So I would say, again, who knows, Stephen could be a great guy, but I would say go check out his book. Go check out his book. It's probably a very interesting look into someone who is worth $30 billion, and you can probably learn something, a thing or two. We can all learn good things, and we can learn bad things that people are doing as well. So I appreciate your time and energy. Thank you for coming to my TED Talk. I really appreciate it. Really important times we're in right now. So please share this out, because the algorithm hates truth. Algorithm hates truth, hates reality. It hates digging for truth. And it hates your rights, quite frankly. It hates your ability to protect yourself. It hates freedom of speech, freedom of religion, everything. So please share this out. Please, 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 please share this out. And let's build community with people and be prepared for what's coming, because it's massive, massive opportunity. When this hippie bubble pops, everything popping, the everything bubble in general, the hippie bubble included in that, the next generation, the Gen X, some of the Gen X, well, much of the Gen X, millennials, and the Gen Z coming, we are what will have to build the world going forward. We have to rebuild in a truly fair way, an equal playing field. This is what Bitcoin is. Rules without rulers. We live in a fiat world in rulers. Stephen here, this man, these people, we live in a world with rulers and no rules. So I appreciate your time and energy. It's the most important asset we have. The only finite thing we have. Time is Bitcoin, and Bitcoin is time. It's not financial advice. It's freedom advice. I'll see you on the next one.